A deal on banking union that even the Brits can live with. Greece gets the green light for its latest bailout, and Italy and Spain see strong demand and falling yields at their bond sales. Who says the Eurozone can't make progress? I'm Jamie McGeever, and this is today's Market Pulse. Well, let's get straight out now to Peter Shafrick, Head of European Rate Strategy at RBC Capital Markets. Peter, pretty good auctions from Italy and Spain, decent demand and yields lower. Is this a sign of things to come for 2013?
Probably, yes. I mean, we've seen, and I think we had our fair share of things to deal with this year, so I think we can quite comfortably look ahead for the next couple of weeks and saying that's probably it. I mean, mind you, there's always a little bit of auction activity between Christmas and New Year, particularly out of Italy, but usually these go well, and it shouldn't be any different this time around either.
Are you a buyer of Italy and Spain, or Italy or Spain?
It depends a little bit what kind of time frame you're looking at. In general, I would say I'm a buyer of both. We are fairly constructive on the peripherals in general in Italy and Spain, front end, and also a little bit at the back end. If you ask me about more near term, I mean, there is still the elections, and I definitely do not want to belittle it. And the elections in Italy can cause quite a bit of jittery, I would say, in the Italian market, and I would prefer Spain over Italy at the moment on a more near-term basis. But in general, yes, I do like them both.
So what are the yield levels and spread targets we should be looking at?
Well, look, I mean, at the 2-year area, I think both can trade all the way back down to, say, 2%, maybe even below that. That's particularly appealing for Spain. But particularly if you look at the forwards are way above that because the carry is quite enormous, as you know, with the funding rates essentially at zero. So I think 2% is a good target, but even there I would remain a carry buyer. And at the long end, I think Italy can trade down, let's say in 10 years, down to 4%. They can manage that.
OK, and as I mentioned in the intro there, Greece today getting the approval for its next tranche of aid. If Greece is off the radar for now and Italy and Spain appear to be in relatively good shape, what are we all going to panic about?
Well, let's hope that we don't have anything to panic about for the time being. I mean, there will be enough of uncertainty on the agenda that will markets at some stage freak out a little bit about. So say there's the redemption money for the LTROs, there is the Italian elections. Later on in the year we get the German elections, and all these events are fairly meaningful. But, and I think that's the crucial thing, we should be past the point of panic for the euro area overall, and that is a major achievement, and that makes me more comfortable being in these peripheries indeed.
Past the point of panic. Let's hope so, Peter. Thank you very much. The US dollar bounced back from initial losses after yesterday's announcement of fresh QE by the Fed. But by extending its $85 billion a month of asset purchases, most analysts are betting on renewed downward pressure for the greenback. Technical analysts at ING among those to say that the long-term downtrend remains in play for the dollar index. With prices well below the 50 and 200-day moving averages, they say watch for a test of short-term lows at 79.57. A break of that level would clear the way for a test of long-term support down at 78.70. The prospect of more QE not doing much for European shares either. Benchmark indices lower today, and a classic case of buy the rumour, sell the fact. Investors also fretting over the so-called US fiscal cliff. That's all from us for now, but join us every day at this time to look at what's moving on markets and why. I'm Jamie McGeever. This is Reuters.